During the pandemic, the bicycle industry looked unstoppable. When the world shut down in 2020, bikes became a freedom, a way to move, to escape, and to breathe again. Demand exploded overnight, and for a moment it seemed like cycling had entered a new golden age. But that boom came at a cost. Supply chains snapped, shipping costs soared, and by the time production finally caught up, demand had already started to fade. Warehouses filled with unsold bikes, companies collapsed under overstock, and profits across the industry fell to record lows. 5 years later, the question isn't just what went wrong, it's what happens now. After the pandemic surge and the painful correction that followed, can the global bicycle industry find balance again? Or has its greatest boom already passed? In 2020, as the COVID-19 pandemic brought the world to a standstill, one of the few industries that could keep moving was the bicycle industry. People were still allowed to exercise outdoors, bike shops were permitted to stay open, and demand for bicycles rose rapidly. Across Europe, bike sales skyrocketed by more than 30% in some countries. Manufacturers simply couldn't keep up. Waiting lists stretched for months, and many retailers sold out completely. Production lines, however, couldn't just switch on overnight. Factories in Asia, where most components are made, faced shutdowns, labor shortages, and massive transport delays. When the Suez Canal was blocked in 2021, it symbolized a wider problem. The global supply chain had broken. Shipping costs quadrupled, and even small parts like derailleurs and brake pads became impossible to find. By 2022, the global bicycle industry had finally caught up, but it was sailing straight into a storm few saw coming. After 2 years of shortages, factories and brands raced to fill back orders, scaling up production at record speed. According to the European Commission's Eurostat, bicycle output in the EU reached 12.7 million units in 2022, one of the highest levels ever recorded. But as production peaked, demand was already fading. Life was returning to normal, commuters were back on public transport, and inflation was squeezing households' budgets across Europe and the United States. Retailers soon found themselves surrounded by unsold bikes. Official data from Konebi shows European bicycle sales falling from 14.7 million in 2022 to just 11.7 million in 2023, while e-bike sales, though still well above pre-pandemic levels, also dipped slightly. At the same time, EU trade data revealed the same story. In 2023, exports dropped by 10% and imports by 21%. Clear signs of cooling demand and retailers struggling with overstock. The industry that once thrived on shortage was now drowning in surplus. Warehouses were full, cash flow was tight, and prices began to fall fast. In the UK, one of the most dramatic examples came from Moore Large & Co. Limited, a distributor founded back in 1947. The company collapsed into administration in March 2023, holding an estimated 35,000 bikes worth 25 million, plus another 10 million in accessories. Moore Large director Adam Biggs said, "There was a big boom in bike sales during the COVID period. That big demand led to a big increase in supply. Then the supply caught up and loads of stock arrived in the first quarter of 2022. There was a year's worth of bikes arriving in the UK at the same time, which meant there was a massive oversupply." And Moore Large wasn't alone. Across the industry, overproduction and bloated inventories crushed profits. Giant Group, the world's largest manufacturer, reported a 62.8% drop in net profit in 2024. Rising material costs, expensive freight, and falling consumer confidence turned what had been a golden age into a global correction. Many smaller brands barely made it through the financial turmoil that followed. Orange Bikes, a well-known British mountain bike manufacturer, filed a notice of intention to appoint administrators in January 2024. Its future was ultimately secured through a rescue deal led by its owner Ashley Ball. Meanwhile, the Dutch e-bike maker VanMoof, once seen as a symbol of urban cycling luxury, declared bankruptcy in July 2023. It was later acquired by the British e-scooter company Lavoie, part of McLaren Applied, giving the brand a second chance under new ownership. Another example comes from Brompton, one of Britain's most iconic bike manufacturers. Its 2024 financial results reveal how deeply the industry overstock problem hit even established brands. For the year ending March 2024, Brompton's profits collapsed by more than 99%, falling from about 10.7 million to just 4,600. After 2 turbulent years, 2025 finally feels different. The chaos of the pandemic boom and the painful correction that followed have given way to a period of stabilization. Across Europe, the bicycle market had stopped shrinking. According to Konebi's 2024 industry report, sales have returned to pre-pandemic levels, showing that supply and demand are finally in balance. The European Commission's latest trade data also indicates that import and export volumes have flattened after their steep 2023 drop, a sign that the worst of the inventory crisis might now be behind us. At the same time, companies are adapting to a new reality. Manufacturers have scaled back production forecasts, distributors are keeping leaner stock levels, and retailers are focusing more on repairs, servicing, and e-bike maintenance rather than endless new model releases. In the UK, according to the Bicycle Association, 2025 brings about 2% rise in total bike and parts sales, a small but important step after slow recovery. That cautious optimism is echoed by real-world performance. Halfords, the country's largest bike retailer, reported a 1.7% increase in cycling revenue for the year ending March 2025, and a further 4.1% growth in the first half of its 2026 financial year. Even modest numbers like these suggest the market has finally stabilized after 2 years of turbulence. Globally, the supply engine remains strong. China produced nearly 100 million bicycles in 2024 and exported almost 48 million, up more than 20% year on year. And while traditional bike sales remain soft, e-bikes continue to drive growth. In Europe alone, 5.1 million e-bikes were sold in 2023, slightly down from the previous year, but still more than 50% above the pre-pandemic levels. Unfortunately, 2025 also introduced a new challenge: tariffs. In the United States, a wave of policy moves have stacked multiple duties on bikes and e-bikes. Industry group People for Bikes reports that as of August 2025, e-bikes were added to the Section 232 derivative steel list, exposing their steel content to a 50% tariff. For many imports, that sits on top of other duties already in force. Earlier this year, the administration also floated, and in some cases implemented, reciprocal tariffs and country-specific surcharges, with developing trade frameworks for Vietnam, Thailand, Cambodia, and Malaysia. For several of the sources, additional 19 to 20% charges apply on top of base duties, and bicycles and e-bikes were among the exclusions. So what does all this mean for 2026? If these tariffs remain in place, US importers will face significantly higher landed costs, especially on e-bikes. That means higher retail prices, narrower product ranges, and continued financial pressure on smaller brands that depend on overseas suppliers. To adapt, more companies are expected to shift toward nearshoring and local assembly, reducing their exposure to volatile import costs. Outside the US, Europe looks steadier. According to Konebi, sales have settled back to pre-pandemic levels, 11.7 million bicycles in 2023, setting a foundation for modest, sustainable growth in 2026, provided inventory levels remain under control. Meanwhile, cities across Europe and beyond are continuing to invest in cycling infrastructure, and commuters are choosing electric mobility over petrol, a long-term shift that's likely to support the industry for years to come. The structural tailwind remains clear: e-bikes. Analysts expect growth to be steady rather than explosive through 2026, a market that's smaller, smarter, and more service-driven, with e-bikes firmly at its core.